All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We've had what, 9 signals this month. I expect 8 to 12 signals a month to come in. We're on a good signal pace here. But I understand it doesn't necessarily feel that way when we've only made 3 trades, and the first 2 got blown out of the water with a missile. And okay, Pepsi worked out great, go fine, and we're slightly in the green, but just feels sluggish, right? But at the same time, most of the signals have been very effective. If you look at the trends that the stocks have gone on post signal, Netflix, Starbucks, CSX, IBM, Starbucks again, Pepsi, AT&T off to a great start, and Disney didn't. Disney went back into consolidation, and we'll see how GM plays out. But they've been running with significant effectiveness. That said, I've not been able to trade them all. Netflix, because we did Disney and Starbucks. It didn't have the cash for it. CSX earnings, IBM earnings, which the reaction was very positive. After the challenge hits 10K, I will be willing to hold earnings and trade, some of the earnings. It'll be to a lesser degree in terms of exposure, but, we'll be willing to do that because when it comes to the algorithm, the earnings results, that follow the algorithm are actually pretty good. Now, the option application, that one's a little bit different, and that's why the lower exposure. And then GM, obviously earnings upcoming, AT&T earnings upcoming here. And, today I thought we'd have, 2 potential triggers on the board. Juniper to the downside, but you'll notice doesn't have the crossover. It's just missing the crossover, but it also has earnings here, on the 27th, so early next week. And then FedEx, which, I mentioned this morning I thought would have a good shot at triggering, and it's not. I was a little surprised. Consolidation risk component on it, it's a little bit high there for it. The options aren't priced the greatest, but they're not bad. There are no earnings priced into them, which is nice, but no signal here for FedEx. On the crossovers here today, on the bullish side, there are no bullish crossovers. There's no 3 days crossing up above 7 days out there, to even consider. And then on the bearish crossover list, we have Alibaba, Caterpillar, FedEx, and Netflix. Netflix, with earnings here today, Caterpillar and Baba, neither even close to triggering there. And then Dollar General, this one's actually new on the list since I ran the last scan here. But let's see here. In fact, I'm going to go run the scan here again real quick. Let's see if this is a signal. This one might be a signal here. All right, that is running on my other screen. We'll see. You can see the 3 and the 7, how close they are, right? The 3 and the 7 are exactly the same, so we don't really have that crossover here just yet there with Dollar General. Let me double-check the earnings date because it may be a moot point if earnings are this week, but no, yeah, they're an off-cycle earnings, so that's not an issue. Let's take a look at the option values here. See what they look like. Yeah, the option values. Yeah, the spread's a little bit high, but that's typical for Dollar General. Nothing too crazy there. All right, and with the ATR, be looking for about a $5 move there with it, and so let's see what the options look like with that. Yeah, not bad at all. In fact, pretty good. Yeah, pretty good. So we'll see if that's a signal here. That'll probably take another 60 seconds to run or so here for me. But if that does trigger, I will, I'll go after it. Okay. All right. Now, yesterday with these 2 signals on the board, GM and AT&T, Michelle forwarded me over a question this morning asking for price targets for them. And I realize some of you are trading the signals, even though I'm not. And, hey, go for it. There's nothing wrong with that at all. sorry. No signal on Dollar General. Consolidation risk component is actually really high. So anyway, not going to make the Dollar General trade there. But the question came into price targets, specifically for GM and AT&T. Even though I wasn't trading them, how do I figure out the price target for those signals? So let's go take a look. Let's start with we'll start with AT&T and then we'll do GM. But the process is very simple. Okay, it's a very, very simple process. And if you want more information on it, there is a video discussion where I kind of explain the details of it there with it. But the ease of it is pretty easy if you have a chart that can calculate an average true range. Okay. Just on a daily chart, an average true range with the parameter of 14. Okay, that's half a month, about 14 trading days there. And the average true range here in the case of AT&T is 41 cents, right? So you take the stock at your entry point. Well, I use the entry point there with a lot of the testing and everything that we did, even in real time. A lot of it we used the closing prices, but when we got back into the real time testing, we used the date stamp. But we noticed there's not a whole lot of difference there. So whichever one you'd want to use, whether it be closing price, whether it be your entry price, it doesn't make a whole lot of difference. Yes, it does affect the price a little bit, but it's not going to affect your results all that much. Now, so we take a look at it. The ATR is 41, right? So that's what it was yesterday. It was 40. Well, it was 40 cents yesterday. So let's go take a look at it yesterday. And the price of the stock yesterday was what? It closed at. Well, let's see if we can just. Let's see if we can come here to a 2-day. There we go. And we'll click annotate. And the close of the price was $38.52. All right, $38.52. So it's a very simple process. We take the $38.52, and you see this happen in the spreadsheet, right? We take the stock entry price, the $38.52, and then we take the ATR, 0.40, right? What that will do is give us an exit level that is simply the entry price minus 1 ATR. Okay, so if I scroll that equation down, it would give us 38.12. So you'll notice 38.52 minus 0.4 gives 38.12. Now, as far as the profit level, it's going to give us 39.32. Well, what's the calculation? Well, it's very simple. It is simply the entry price of the stock plus 2 ATRs. Okay? That is the initial profit level where we trim some and let the rest run and then just reset the whole process. So the initial price target here is $39.32. So when we look at AT&T right here, it's $39.06. So it's just shy of its, of its profit target here. It hasn't hit its profit target here today. That it would be. And I have 130. Yeah, there we go. So it hasn't hit the profit target, that we'd be looking for the challenge here so far. There's nothing too magical about the price target, right? It's not like, if we go back to Pepsi, it's not like we're looking at a stock and saying, well, you know what? The price target has to be this, and it's because there's support and resistance, or it's this because of that. It's not looking at anything in that regard. It is taking a look and going, okay, what has been the average movement for this stock, right? And if it's going to consolidate, we tend to see that consolidate within an average true range, right? When it's trending, we tend to see it burst into that 2 to 4 average true range area. So, great. moves into the two average true range area, pull some, hold the rest for the 4 average true range area, right? Pepsi's kind of making an idiot out of me as it's just gone straight up the last 3 days. But, had we been holding on to some more Pepsi, we'd be pulling the rest of it here today as the ATR is reset once again. And so, it's just a very simple process. It's one that, is there possibly a better model for it? Yeah, there possibly is. And there are things that I play with and, things that are happening in real time right now that I'm looking at. As far as, other options for it. But it's one thing to create the triggers, right? It's one thing to create the triggers. It's a whole nother thing to then find an exit strategy that fits those triggers. That's a whole nother thing to add options to it, right? And, sometimes those three things don't mesh well. But when they do, and it's very solid, it's very nice. And it is something where the options and figuring out whether the options are applicable is very easy, right? I know I'm not always loved when a signal happens and I don't get into it. I get a little bit grumbled at. That's fine. That's no problem there. That's fine. I get it. I understand it. Feel free to go trade it. But there is a specific option ratio that I'm looking for that I won't trade outside of that, because the risk doesn't justify, or the reward doesn't justify the risk. And if we're in bad risk reward scenarios in a challenge format, that doesn't lead to consistent success, right? The entry trigger algorithm, easy to build? No, not at all, right? But doable, and something we're able to find a really good, really good solid one. It took a long time, and it needs adjusted here and there, but it's individual stock based. It's not this blanket algorithm that's just, hey, you just plug in a ticker and see what it does, right? It's individual stock based. It not only tests well, but, in real time, real trading, has the results I'm looking for. We get trends from these, right? We get a high percentage of these, really trend, which is what we need. The most difficult part is this ATR method. And while it's the easiest one to kind of understand and take a look at, when it comes to taking profits and taking losses, on option trades, that's one of the most difficult things out there in the market. And everybody's got a million different theories, right? Well, you take a double. Well, you do this. Well, you do that. You never let a loss get below 40%. And then the next person says, you never let one get below 60%. There's a million wisdoms out there, right? And every time you turn on the TV and listen to somebody talk about the stock market, there's a new wisdom, right? And the reality is, what are those based off of? What are those based off of? What metrics? What numbers? What consistency are they based off of? Right? For the most part, they're not. They're based on something psychological. Right? They're based on something of, well, I don't like having anything bigger than 50%, so I got to take it. And if it's up 100%, I just got to take it because if we got a double, I'm happy. It's all tends to be psychological, not metric-based. And so applying something more metric-based is a little bit more difficult, but this is what has applied the best, so far. And it's something that, it's something that I'm happy with, and I think, hey, can run a challenge very well. Do I think there could be something better out there? Yeah, I do, and that's why I play with a lot of different things there with that. But at the same time, it's one of those where I do not believe that any exit strategy will be perfect. That the whole idea of, we'll find a strategy that always gets us out at the top, it's pretty ludicrous. And I know, a lot of traders, we have the mentality, yeah, we can do that. But it is a ludicrous idea to be able to consistently repeat, over and over. There with it, consistently repeat over and over. Wow, saying the same thing in 3 different words, but you get the point there with that. But anyway, that's how you'd calculate it. Sorry, a little diatribe there, but that's how you'd calculate the price target there with it. And you'll notice the chart looks very much like Pepsi did, on its breakout. And you'll notice that this resistance level doesn't have anything to do with anything. There is nothing about the algorithm that takes into account support and resistance levels. There's a good reason for it. You go back and you look at support and resistance levels, easy to find support and resistance levels over the last 3 to 4 years. Support and resistance and the effectiveness of support and resistance has really gone away. Really gone away. It's one of those where if you're looking for just levels to be support and resistance, it's not all that great. It's one where, some volumetric stuff still works, but just pure levels, that's just really kind of gone away out there for a number of reasons. But anyway, if we go to GM, right? We go to GM, which triggered bearish yesterday, right? And no gain on it, no loss on it here today. It's at 0. But it's the same process, only opposite, right? If we come in, we can look at the average true range, right? Which the average true range is 61 cents, right? So the price target on this is going to be 2 times 61, so $1.23, right? So we're looking for a $1.23 drop, so to 33.77, right? 33.77 would be the initial price target here for GM. Okay, and that's where that's just how you'd calculate that. You just take the price of the stock and you subtract 2 average true ranges. You want your stop, well, you take the price of the stock and you add an average true range, and then that's playing it for the downside there. Okay, so you can apply that to anything, and let's just say you want to go out and trade FedEx to the downside right now. You say, well, I know it's not a signal, but you want to go and play it and apply the average true range method. That you could still apply it, right? You could still apply it there. But one of the things that you probably heard me caution about in the video discussion on this was this method doesn't apply to all trades. Right, if you're just taking, playing oscillations and overbought, oversold, and trying to apply this method, it doesn't work. This is something that only applies if you are confident that you have found a trend, and if you're not finding trend at a high probability, this method is pretty garbage. It doesn't work at all, and not something I would recommend. If you are playing and finding trend, then yes, it's very solid method there for that. All right. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.